Last week, we wrapped up Becoming Your Own Banker. We did an 8-part series going over every chapter in that book and giving you our thoughts on it. Be sure to check that out. This week, we're talking about, should you buy the same policy design that your agent has? This is going to be an interesting conversation, I think. So stick around. This is the Life Insurance Financial Education Podcast, where we're pulling back the curtain on high cash value life insurance and how it can help you build wealth and achieve your financial goals. I'm your host, James Barber, your Oregon Cash Flow Pro.
And I'm Carlo Viqueira with Net Wealth Finance.
So should you buy the same policy design as your agent? Thoughts off the top of your head?
I think there's a reasonable argument to be made when somebody who is the person who might be selling you a policy, normal instinct is to say, yeah, I want something like what the person is selling has. And I would say in some cases that might be true, but really you should analyze based on the numbers and what makes sense to you. So it doesn't necessarily mean it is definite yes.
Yeah, I kind of liken this a little bit to the phenomenon that happens when somebody goes to sign up for their 401k at work. Most people end up with the same portfolio setup or the same diversification as the HR person that's right there in front of them, because most people don't know what to do with it. And so they just ask the person there, what should I put? And that's what they end up with. It's a weird phenomenon that happens. People don't actually know enough to make decisions. And so when an agent says, well, this is how I designed mine, you tend to want, if it's somebody that you're building a trust with, you may be the type of person that tends to go, okay, well, if it's good enough for them, then it should be good enough for me. But why might a design that an agent does for themselves not quite be as good for a client?
One of the reasons why it might not make sense is some of these can be a good product of a whole life or an IUL, and they could reasonably perform over a long enough period of time. But the issue that you run into is it the optimal scenario with that higher early cash value that results in some of those long-term, little bit ahead scenarios? And that's the issue. The commission going to the agent, they can get around that. If they get a policy in a way that might be suboptimal, in the end, they're just getting paid a higher commission as a product of that. And that is how it could be justified to have that design in their eyes.
Yeah, so how I was looking at it was an agent can buy an all-base whole life policy or an all-base IUL, and that might be a very expensive policy, but they're going to get the full commission on that. They might get 100% of the commission on that policy. That offsets some of the expenses in that. Now, a lot of agents may not knowingly do this also. There's a lot of new agents that constantly get brought into this business, and they're not taught that there's any other type of low-cost design that they can do. And there's also these multi-level marketing companies that an agent will come in, get recruited into one of those, and the first policy they get, it's not going to be a very well-designed policy, and they're buying it from their upline. And they have to. Like, that's the way that these places recruit. So you're paying a big commission, it's going to your upline, and then because you became an agent, you're going to sell to your friends and family, and you're going to get the big commission from those types of policy designs. And anybody that you recruit, they're going to come in and they're going to get the same design type that you got, which you know pays you a good amount of money. Yes, these policies, even with all-base designs, could maybe work out in the end, but they're not optimal designs. They're much higher expenses. And so I always talk about it as, what is the likelihood of success when we own one of these cash value life insurance policies? And the likelihood of success is much, much, much greater when we have a high cash value design that's very low expense.
Yeah, and I think a really big factor, and what excites me about funding my policy, is when you see that cash value hit. So in the designs that he was talking about where it's all base, you might have zero cash value that you can access in year one and even possibly in year two sometimes. And that is painful. But with a proper design, when you fund these really close to that maximal funding level and they're really well designed, you could be looking at 80, 90% of cash value in year one, and those percentages can improve every year after that, basically.
Yeah, part of the likelihood of success being so high is the emotional factor. When you're putting a lot of money into a policy and you can see what it's doing immediately, the impact on that cash value growth and the impact on what you're going to get kicked back as a dividend or growth in the policy on an index growth. That is exciting. Like every time my anniversary rolls around, I'm excited to fund that policy. But when I talk to people that own a bad design policy that has really high expenses, it might be not optimally funded as well because of the way that it was designed. They're not excited to put money into this policy because they just don't see it growing. And if you start in the beginning, because you don't see that cash value growth, if you start lowering your funding, reducing the funding, it kind of snowballs and makes the policy worse and worse year after year instead of better and better from a really good policy design.
And that actually connects to another reason why these lower your chances of success. And that is the minimum amount that you have to put in to these improper designs is going to be higher, especially if you're talking about all base. Now, there's some folks who will do blend still, but when you have that all base, your minimum is really high, and it's a huge difference with if you have a proper design. We're talking about 10% of what is the minimum otherwise sometimes. So that is a big consideration when you have a rough year and you might have something going on where you can't max fund. You have this ability to lower fund in a year in a proper design and a good product.
Yeah, if you have to commit to this big all base design or very heavy base design, you just don't have the flexibility to reduce what you put in to a point that might not threaten the policy. So not only are they emotionally withdrawn from wanting to put more money into these policies, but they have to either put a big amount in or the policy could lapse. That's a tough situation to be in, and that's usually when you tend to see a lot of lapses in policies. With an optimal design, you have so much flexibility. You max funded that first year, you probably just met the minimum for the next 10 years. And if you had to, you don't have to fund it. If it came down to it, you could pause the funding on it until you financially recover in the rest of your life so that you can keep the policy going. Or if you had to cancel it, at least you get most of your money back.
Yeah, and that's the thing is when people are in this situation where they have a design like this, it can be really disheartening, especially knowing that their options are not great because some of the charges that are in there, since they don't have that cash value, if they're to walk away, they might be walking away from $10,000, $20,000 that they've just given up because of this improper design. So it is really important that you talk with an agent that knows what they're doing, and it's not a bad idea to even get a second opinion or get other illustrations. James and I are happy to work with you if you're already getting illustrations from an agent. I think we're happy to take a look at what you're getting and help optimize if it makes sense.
Yeah, so should you buy the same design as your agent? Not necessarily. That's where we fall on this. Some agents will design the best policies for themselves. I know when I've ran illustrations, when I was looking to design the policies for myself, I value liquidity because I want to go do other things. I want to go do other investments, and I want my dollars to be able to work in multiple places. And so I made sure that I was designing the best policy for myself because that gave me the most liquidity, and the proper design gives me the best chance of success inside the policy itself as well. I also extend that design to every single client I work with. There's no difference between a design that I'm going to do for myself and one that I do for my clients, and it's not because of the commission design that I get. I don't account for it when I buy a policy, how much the commission is going to offset my expense. And there are some policies out there. There are some carriers out there that the company will actually not charge any load fees to an agent if they own that policy. but you can bet they're going to be charging all of your clients that. And so me as an agent, I would have an incentive to go buy a policy from that carrier, but it's not a good product. I haven't seen good illustrations from that product. It would be good for me if I didn't have those extra fees. I could definitely make something like that work, but my clients wouldn't be able to.
When I got into this space, one thing, James is a numbers person. I'm a numbers person. I obsessed over finding different ways that I could design for different scenarios, just practicing different scenarios. And I think that's a really helpful thing for me because I really came to really optimize designs for various scenarios. And that's how we like to think about this is we preemptively think about what we might run into an encounter. And so that is something to keep in mind is finding somebody who's just really interested in finding the right numbers for different situations and, having the best designs as a product for that.
Now I have to add something too. Not every one of my clients, the proper design for them is not the same as what I've done. There are situations, and it's usually when I'm working with somebody that's a lot older, that a blended design actually doesn't make sense because the cost of term insurance is already so high due to their age. There can be a situation, and this is specific to whole life, but there can be a situation where it actually just makes sense to buy an all-base design for that client. So in that situation, there's no way I would recommend the client buy a policy that's designed the way that I do my design. So a lot of caveats to this particular topic. This is not a critique on commissions at all. Like, we're not saying commissions are bad and that nobody should earn a commission. Like, commissions are what drives the sale of life insurance in general. I know I wouldn't be able to offer what I do for this if I didn't earn some type of a commission. But I think what it boils down to is what's a fair commission and is it designed properly for these particular clients? And we're going to get more into this next week. The topic of next week is the agent commission justified? And we're going to play some devil's advocate, and we're just going to basically talk about agent commissions. It's going to be an interesting conversation. Be sure to be back for that. We're going to wrap up this week for the Life Insurance Financial Education Podcast. I'm James Barber, your Oregon Cash Flow Pro, and I'm licensed for life insurance and annuities across the country.
And I'm Carlo Viqueira. You can find me at netwealthfinance.com or on YouTube at netwealthfinance, and we'll work with life insurance clients across the country as well.
Take care. See you next week.
Thanks for tuning in.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.